What's good, YouTube? In today's video, we're going to be breaking down my top secret strategy that the government doesn't want you to know about because it's very top secret. All right, I'm just playing. We're going to talk about my A+ strategy, the strategy I use every single day going into the markets that I use to make the profits that you guys see on my live trading every single day. If you guys are in the Discord, you see my strategy, you want to learn how to implement it, I'm going to break it down right here. I made a video a while back, kind of briefly when I just started implementing the strategy or a little bit after that. But in today's video, I want to break down fully how to use it, the components to look for, the criterias, the market environment, the market to trade in, the time frames, and so on. So now you guys can learn how to implement it on your own trading as well, literally tomorrow after watching this video. All right. Some of my students also trade my strategy as well. While I advise them to build their own strategy, they also trade my strategy as well, and I've gotten payouts with it too. So results speak for themselves. Let's get straight to the sauce. No BS. First things first. All right, before anything, these are the trades, by the way, that we took today on Monday, August 4th. We'll do a trade recap at the end of the video when we actually go over the rules so you guys can see how I implement it live and how I took these trades with the exact criteria using this strategy. All right, so first things first, we have to understand this strategy is a trend following strategy, means it needs a way to identify the trend, which we're going to go over the rules for that right now. And then we'll move on to entries and exits, because you're not going to blindly take the criteria for entries and exits. You're going to take the criteria based off a trend, of a bias. And here's how we're going to actually identify the bias. Let's actually make this full screen. It's easier. So, bias checklist. So, number one, let's make this more spaced out so it's easier. The first thing we want to identify for the bias checklist is price above or below the 200 EMA? That is the first thing. All right. If above, bullish. If below, bearish. Plain and simple. If price is above the 200 EMA, you're going to have a bullish bias. If price is below the 200 EMA, you're going to have a bearish bias. And when I say bullish or bearish bias, all I mean is you're going to be biased towards taking positions to the upside. And for bearish, you're going to be biased towards taking positions to the downside. Now, that's it for the first criteria. The second criteria of part of the bias formation checklist is going to be, is price trending in the direction of our bias? And then for further explanation, you could say, in other words, uptrend with bullish bias, downtrend with bearish bias. All right. When I say uptrend, I don't know why I put a uppercase U, but whatever. When I say uptrend, all I mean is higher highs and higher lows. We can even write that if you want to make it even more clear. Higher highs and higher lows. Downtrend of, downtrend. Oops, I erased that word. Of lower highs and lower lows with bearish bias. All right. When you get the first two components together, and first of all, you need both components together, or else you don't have a valid market environment. You need both those together to actually move on to the next step. All right. This is like, think of it as a top-down format, literally a checklist. Okay. Overall strategy checklist. These two are the main bias checklist. The next one is actually entry criteria. I should make it all capital. Entry criterias. All right. Now, the first thing we'll look for our entry criterias is we want to see price pullback between the green and red SMA. All right. Next, then that's the first step. All right. I'll show you guys the green and red SMA on the chart when we go to that example, but just keep this in mind. We want to see price pullback between the green. Oh, I don't know if I showed that the whole time. I think you guys can see that. Price pullback between the green and red SMA. Number two, you want to ensure price hasn't touched the red SMA. Okay. Once price does touch pullback between the green and red SMA, right? It can wick into there. It can close into there. Doesn't matter. We want to make sure the next step is true. We want to ensure price hasn't touched the red SMA yet. All right. Part of the Williams alligator indicator, which we'll also go over in a second. Don't worry. Just understand it. Just understand the rules. All right. if it did, actually we can add like a point, like an A. If touched red SMA, wait for price to break the current swing high or low, whichever direction, for bullish / bearish. All right. So if the price did touch the red SMA, you're going to wait for, okay, why isn't it letting me highlight this part? We're going to wait for price to break the current swing high for a bullish bias or a swing low for a bearish bias trade. All right, and I'll show you guys a visual example if that's hard to understand, so don't worry, just bear with me. Make sure you're understanding the rules that we're writing out together so you guys can see the strategy form from the jump. All right, next, once we have this cleared, the price hasn't touched the red SMA, the next thing we're going to want to look for is price, or actually I should add this and go back to step 1. Go back to entry criteria 1. All right, so all I wanted to mention was if price does touch the red SMA and we want to wait for price to break the current swing high or low for bullish or bearish, and then go back to start from criteria number 1, which is price pulling back between the green and red SMA after we broke the swing high for example, a bullish bias. Then again, you want to make sure number 2 is also true, and then you can move to step 3. All right, so it's going to be a loop between 1 and 2 until you pass 2, or past 2A, you could say. Once you pass that, price didn't touch the red SMA, we pulled back between the green and red. Next thing you want to look for is a actual candle or candle close above the green, or above / below the green SMA, matching, or with the candle matching our bias. What does this mean? What this means is we want to have a bullish candle close for a bullish bias or trade, you could say. Vice versa for bearish. Does that make sense, y'all? Repeat to me. Say yes in the video if it makes sense. Yes, RO, it's making sense. All right. Once we touch between the green and red SMA, we want to wait for a candle to close above, in the case of a bullish trade, above the green SMA, back out of the green SMA, with the candle type matching our bias. All right. If our bias is a bullish bias, we want the candle type to be a bullish candle. And what is that? A green candle. I don't want to say green because some people might have different color for their bullish candles. So we'll refer to green as bullish and red candle as bearish. All right. We'll refer to it as a standard, bullish and bearish. Now for a bearish trade, obviously, like this rule says, we want to have a bearish candle as our entry criteria. Sometimes you'll see the candles will close out of the green SMA with the opposite candle type, right? It'll wick between the green and red SMA, but it might close out with not the candle type that we want. So in those situations, we're not going to enter. We're going to wait for that next candle to open and that candle to give us the green candle in the case of a bullish trade, or red candle in the case of a bearish trade. All right. Don't worry. We'll go over a good amount of examples so you guys can understand. Next, once you do that, we can literally add this rule, like enter a market order on candle close. Extra note. Okay, that's at the bottom. To make this process easier for you guys, extra note, enter with a default ATM strategy of you could say 10, you could say 15 points, 1-to-1 RR. That way, the automatic stop loss and TPs will be placed on your chart, and all you have to do is drag your stop loss and TP. If you're on NinjaTrader, actually, I should mention this if you're on NinjaTrader, because a lot of you guys are not trading directly on TradingView, and if you are, great, you can easily drag your stop loss and TP for certain brokers, and that'll make it a lot easier. But if you're not, and you're trading on NinjaTrader like me, this is the exact way I do it. Enter with a default ATM strategy of 15 points, 1-to-1 RR, then drag TP and stop loss where it's supposed to go. Now, that takes us to our next step, which is what is our TP and stop loss? So, our TP first and foremost, we should actually cover stop loss first, but we'll do that actually. So stop loss placed at the furthest point of the current pullback. All right. Hopefully self-explanatory. That makes sense. You're going to place your stop loss. For example, if we have an uptrend and then a retracement and we get our tap between the green and red SMA, imagine 2 green moving averages. We tap between that. We don't touch the red one. And then we get a candle closing back out, a green candle for a bullish trade, not a black candle or a red candle, a green candle. Then we enter a market order on that candle close, and our stop loss is placed at the furthest point of that retracement that we had right before our specific entry. Plain and simple. And if it's hard to imagine, don't worry. We're going to go over some chart examples. But all this is helping you engrave the knowledge into your brain so that when we do go over examples, it's a lot easier to understand and distinguish. Okay. Our TP, this is a little weird rule, but I like to implement this. Okay. TP placed at the swing high or low for high. You guys already know swing high is going to be for your bullish trade, or swing low is going to be for your bearish trade, but we'll just add it. Bullish / bearish. TP placed at the swing high or low for bullish or bearish, and want to have a minimum of 1-to-1 RR. So in the situations where your swing high or swing low is not giving you a 1-to-1 RR, just target 1-to-1 RR if swing high / low is less than 1-to-1. Plain and simple, guys. There's nothing else you need to change. You never change your stop loss. You only want to change your TP from either the swing high or 1-to-1, whichever one gives you a better risk to reward ratio. All right. I mean, it's big enough. Less than 1-to-1 RR. All right. That's very plain and simple. Let me just decrease this font size so I can fit this on the screen. The only thing we have left is trade management. All right. Okay. This is pissing me off. I have to make this all caps because everything else is caps. Trade management. Actually, let's just make this like nice and sexy right now. Trade management. All right. This is what you guys are going to do. The only thing I do for trade management is we're going to move stop loss to break even. BE means break even when price moves 1-to-1 RR in profit. Obviously only for trades with greater than 1-to-1 RR. All right, so if your trade is a 1-to-1 RR, there's obviously not going to be a stop loss to break even because when it moves 1-to-1 RR, you're going to take profit. So the only cases we do this is when trades are greater than 1-to-1 RR. We'll move our stop loss to break even. And the way you would do that, for example, you grab the position tool. Let's say you place your stop loss, like we have a nice uptrend, a retracement. We get our entry right here. Let's just say it's right here. You're going to place, let's just say hit TP. You're going to place, let's say we entered right there. Stop loss at the furthest point of the retracement. Our TP, we're going to quickly calculate. All right, where's 1-to-1 RR? Right there. Boom. We can draw this line out. Boom. And then drag our TP at the swing high, which is all the way right here. This is the swing high, right? The highest point from when we started retracing. Then now you know when price reaches this yellow line, our stops will be moved to break even. Or if you're using a broker that you can literally add this as a rule into your kind of trade management, great, go ahead and do that. But for those of you guys who don't, this is how you're going to go about it. All right. So when price does, let's say right here, this point with this white line where it crossed over the black, you'll just drag your stop loss to break even or drag your order to right where your entry is. And that's about it. You'll leave it as it is. Okay. That's the only thing you guys are going to do. Everything else staying the same. Okay. You want to follow these rules as precisely as possible. And that sums up all the rules of the strategy. All right. This is literally all the rules. Now, I might add this in the description of the video so you guys can also copy paste this into like a notepad you have on your computer. But this is literally all there is. All right. There's nothing else complicated to the strategy. So let's kind of make this smaller. All right. So I can now go onto the chart and show you guys a beautiful sexy example. Let's get rid of any extra fluff so it's easier for you guys to understand and see. All right. So the thing I just turned off was my session indicator where it marks market open for me. If you guys want that, it's called trading sessions. Now to get the actual green and red SMAs, it's called the Williams alligator indicator right here. It's called the alligator. You're going to go type Williams alligator in your indicator section. You're going to add it. And once you add it, you're going to press the settings icon. You're just going to pop this up. You're going to make sure this says 13. You're going to make sure this says 8. You're going to make sure the jaw says 21. You don't really have to put 21 because I have it turned off. All right, that's just the extra blue line. I have that off. I only care about the teeth and the lips. So focus on making sure this is 13 and this is 8. And these 3 are just the default offset values. All the offset does is it shifts the actual moving averages to the left and to the right, or to the right, you could say, based on the amount of the number value you put on this section. So if we put 0 here, you could see the green estimate gets shifted to the left. But if I say offset of 3, it's going to shift it to the right 3 points. All right, you just saw that happen, or you just saw it happen now. But if I say 10, it'll shift it way more. All right, that's all it does. It doesn't change the moving average, it just shifts it. And for some reason, I don't know what genius thought about this indicator, but I use this indicator with these specific values, and it has been absolutely cooking the charts. All right. So with our specific approach with this indicator and our confluences that we have of our bias detection, following the trend, and not taking trades if it's a super strong pullback, it's able to be very profitable for us. So we're going to go over actually trades that we took with this strategy and how you guys can observe it on the charts. Now, today's trades. Going into market open, what do we see? We can run through this together. What do we see? Price is above. Let's just have these rules all the way down here so you can see that. Price is, what is our bias checklist? Is above or below the 200 EMA. It's above, so bullish bias mainly. Number 2, is price trending in the direction of our bias? Yes, we are having a not that crazy, but pretty good uptrend, right? Higher highs and higher lows overall, making just uptrend on the bigger picture, right? Great. That's exactly what we want to see for a bullish bias to get a strong bias. Now, price also above the light blue line right here, which is the 200 EMA. I didn't go over how to install, or not install that, how to add that. So what you're going to go on your charts, you're going to go on indicators, type EMA. Once you do that, you'll get this indicator to pop up for you. You're going to change the length of it to 200. All right, that's it. Once that's on your charts, it's going to look exactly identical to mine right now, and you're all good to go. Maybe the color might be different, but that's about it. So market open, we have a bullish bias. Now, we're not going to take any trades during pre-market. We're going to wait for either from 9:30 to 10:30. That's my trading window as of now. That's what I found to be the most profitable trading window because I don't want to be on here trading till 4 p.m. Eastern time. I'm trading for the first hour because I found that to be the most profitable, so I'm sticking to that. It's also profitable from what I've seen up till around 12 p.m. and I haven't tested it further outside of that trading window, 9:30 to 12 p.m. So you can kind of find your ideal trading window within that time period or even a different time period or even in a different market and test it out. But I trade this on the NASDAQ 100 futures, the NQ, on the 30-second time frame. All right, that's what I use this specific criteria on, this strategy on. And you guys can do so as well. All right, now, market open. We want to wait for price to pull back between the green and red SMA, all right? We got really close to getting that right here, but we didn't quite get that. All right, we're waiting for this entry criteria now. All right, price pullback between green and red SMA. It's not pulling back. It's not pulling back. Okay, it's going. It's going. It's going. We might get the pullback here. Let's see if we get it. Okay, see, this morning we were absolutely getting edged by the market just not giving us the retracement we wanted. So let's just wait. We wait. Okay, let me get this out of the way so you guys can watch it live. We got a tap. Okay, price pulled back between the green and red SMA. Great. That criteria is, let me get this out of the way. That criteria is now met. We want to wait and see and ensure price hasn't touched the red SMA. So far, we haven't. So we're on the clear for number 2. All right. Number 3, we want to wait for a candle close above, and since it's a bullish trade, we want to wait for candle to close above the green SMA with the candle type matching our bias. I should add candle type. Instead of above or below, I should say candle close out of the green SMA. So it pushed into the green SMA. Now I want it to push out of the green SMA without touching the red one. All right, so we're waiting. It did actually close out. You guys can see this black candle closed out, but we don't want to enter off of a black candle. Remember, candle type for our entry has to match our bias. So it's not like the trade is invalidated now. All we're waiting for the next candle to open. Let me do this. All I'm waiting for is the next candle to open. And I want to see, is this candle going to close green or is it going to close black? If it closes green, then I'm getting in. If it closes black, then I'm going to continue waiting until we get a green candle close that closes outside of the green SMA without touching the red. Okay, and we'll give an example of what happens when it does touch the red. All right, let's play this forward. Let's play it forward. Let's play it forward. Let me put this on 30 seconds just to make it easier. All right, play it forward. Boom, we got our closeout. Right, you can imagine during your live trading, you're watching the second on the right hand side right here where it actually shows the time going by. You're watching as the timer is going down. What is the candle doing? What is the candle doing? And you're getting ready to get in right when the candle closes, so you have the most optimal entry. Like, you want to enter the millisecond right when the candle's about to close, so you get your most optimal entry identical to the actual strategy. All right, so we got a candle close out of the green SMA with the candle type matching our bias. Now what do? Number 4, enter market order on candle close. So, market order done. Now, what's next? Extra note, enter with a default ATM strategy of 15 points, 1-to-1 RR. That's only if you're on NinjaTrader. I'll do if on NinjaTrader or Tradeovate. All right, if you're on either one of those, it might be easier to actually have an ATM strategy, because I'm telling you guys, you always want to enter with while having your positions on the chart, like your stop loss and TP on the chart. You never want to be in a trade and wait for yourself to manually close a position when it goes to stop loss, because you never know. You can get a really bad fill, or you can let your mental get the best of you and your emotions get the best of you, and you just let your trade continue to play out, and you don't actually follow your original rules. But when you actually have the physical stop loss where it's supposed to go, right at the lowest point of the candle, then there's no way for you to do anything, because you just have to wait for the order to actually get executed, and then you're good to go. All right, you're not going to let any emotions get in the way, because it's literally an order waiting to be executed. Now, stop loss placed where? At the furthest point of the current pullback, right here. TP placed where? It says placed at the swing high or low, in this case high since it's a bullish trade, and want to have a minimum of a 1-to-1 RR. All right. In this case, we have about, all right, why did it just exit me? Let's do that again. All right, it's deciding to be stupid today. So I'll just give an example demonstration with this position tool. Stop loss is going to go at the lowest point of the pullback, which is right here, right? What is this retracement we have? The furthest point happens to be the same candle that we actually got our entry off of. And then we're going to set our TP at the swing high, but we're also going to remember, what is our trade management? Move stop loss to break even when price moves 1-to-1 RR in profit. And in this case, our trade is a 2.4 RR, which is greater than a 1-to-1 RR. So let's figure out where that 1-to-1 RR mark is right here. So we're going to grab the horizontal ray, place it down right there. And then we're going to go and extend this all the way back up. So now we know how far our TP is, and we know where the mark is for our 1-to-1 RR. So now we've entered our market order. We're in our buy position. Your trade's not going to glitch out like it does on replay mode on TradingView, so you're fine. Don't worry. We're going to play this forward. All right. Boom. Price just strike past the 1-to-1 RR. As soon as that happens, we're going to drag our stop loss order back to that, all the way up to break even, I should say. Not back to. Break even now, stop loss. We're just going to let the trade play out and see, is it going to hit our stop loss at break even, or it's going to go to our take profit. The reason we implement this break even rule is to actually protect us, because some of our trades are really big, really high RR. And from what I've noticed and from my testing, if a trade does go greater than 1-to-1 RR, it's safe to drag our stop loss to break even to actually protect us in case the trade does go against us. Because if it does go against us after going about 1-to-1 RR and profit, it's gonna most likely go to our stop loss. So this gives us that protection to have a risk-free trade, you could say. and actually maintain our profitability, have a high win rate, a low loss rate, and helpful for prop firms, because you wouldn't want to trade to go heavily in profit and then hit your drawdown all the way down here. At least it hits your break-even point where you don't lose as much if you're trading on a prop firm that has intraday, intraday drawdown calculation. So this is going to help you guys out a lot. Now, let's play this forward and see what happens. And boom, TP gets absolutely demolished. That's literally a 100% valid trade example right there. And we actually banked on this with the Discord live. So if you guys want to watch me do that, you guys can go check that on the link in my description. But save that for later. Let's go over the next setup. Now, we're out of that opportunity. Usually I like to go change this right here. Okay, I erased that knowing where that was. But let's just say it's right here. Should be around that point. Oh my God, I'm actually a sniper. Look at that. Precisely 1-to-1 RR. But next setup we can look for if we do get another one, right? Back to step one. Price is above the 200 EMA, so we're going to have a bullish bias. Price is trending in the direction of our bias, right? Clear uptrend. Strong uptrend as well. Now, entry criteria is price pullback between the green and red SMA. Okay, great. We just got that. Number 2, ensure price hasn't touched the red SMA. Great, we haven't touched it yet. Number 3, candle close out of the green SMA with a candle type matching our bias. No, we don't have that yet, so we're waiting for that right now. Boom. Next candle. Exactly. Got that precisely. We're going to enter there. We're going to put our stop loss to the place at the furthest point of the current pullback, which is from the current swing high all the way down to where we got our setup. The furthest point is down here. Okay, you guys can see all the way down here. So that's where our stop loss is going to go. And our TP is where placed at the swing high for a bullish trade and want to have a minimum of a 1-to-1 RR. Just target a 1-to-1 RR if the swing high is less than a 1-to-1 RR. So now in this case, if we target the swing high, where is our TP? What is our risk to reward? 0.32. So you best believe we're not going to put that as our TP. You guys can test that and see if that's actually more profitable. But I've tested it with a general 1-to-1 RR just because I want to have a minimum of a 1-to-1 RR. I've never really traded a negative RR system. But if you guys want, you could definitely test that out and see if that's even more profitable than trading with a 1-to-1 RR. And if you guys' results are actually good, then I'll happily incorporate it and test it out myself as well. But for now, these are getting me good results, so I'm going to stick to this. But remember, I'm always a student of the game. I'm always open to learning and adapting and improving if there's room for improvement. So that's the mentality you guys also need to approach. Quick little mindset tip right there. But we're in this trade. The only trade management left to do, or actually I should say we skipped this part, enter market order on candle close. You don't really have to have a step, but I just added it so you guys are clear. And since we're not on NinjaTrader or Tradeovate, we're just going to enter and put our stop loss and TP on TradingView. All right. Next, trade management, move stop loss to break even when price moves 1-to-1 RR and profit. Now, this trade is literally a 1-to-1 RR, so there's no break even rule at all. We're just going to let it play out and see what happens. In profit, boom. Literally smashed through TP just like we did today on the live stream. So that's very valid trade. 2 valid trades for today. Let's see if we can find a loss after this. Also, I like trading only 2 trades for the day just to keep it consistent and remove any outliers in my trading performance, because there's been days where I lose 3 trades in a row and there's been days where I win like 4 trades in a row. So I don't necessarily want to have those big outliers, especially with prop firms, because that puts me at a not necessarily disadvantage, but basically based on the way they structure their rules, it's not really helpful to have these big outliers. So I just keep myself consistent at 2 trades a day. And that's all I need. If it's 1 win, 1 loss, I'm done. If it's 2 losses, I'm done. If it's 2 wins, I'm done. If it's a win, then a loss, I'm done. All right. So any combination of 2 trades, that's all I'm doing. All right. So it's really helpful to also, for you guys, if you struggle with psychology and greed and jumping back into the market, force yourself to only take the first 2 opportunities that arise with your setup and you will be fine. Or you can also say, if you trade a discretionary strategy, you're only limited to 2 A+ trades for the day. That's it. All right. But I would recommend leave it to the first 2 setups that actually appear on the day. But without further ado, let's see if we do get a setup. Boom. We got another candle close after tapping between the green and red SMA. That's going to be our entry point. Stop loss at the furthest point of the pullback. TP, where is a 1-to-1 RR? Because this is obviously bigger than 1-to-1. So let's calculate this. 1-to-1 RR is right there. TP is going to be all the way there for a 4.16 RR. Let's play this forward, see what happens. So price does decide to wick past here and then stop us out at break even. So this trade would have got us out at break even. All right, because our stop loss would be here after passing this black line, and that would be a break even trade right there. Now let's see if there is another entry. Okay, boom, a black candle. Okay, actually, let me mark this real quick just so we have this set up. We have a giant green candle for another entry, all following our rules. We haven't touched the red SMA at all. Remember that. That's the only invalidation point. Then I'll go over what I mean by invalidation point after we have that situation occur. So this is our entry point. Our furthest point of the pullback is still the bottom of this low right here, this black candle's low. So that's where our stop loss is going to be. TP, is it going to be at the swing high? No, because it's 0.7 RR. It's going to be 1-to-1 RR. All right, let me bring the rules here so you guys can visually see that. Okay. So now we just let this trade play out. Let it do its thing. Okay, and drawdown. Boom. Stop loss got smacked on that trade. And what happened? We broke the red SMA. So in these situations where we break the red SMA, you might be like, wait, when do we look for a trade again then? That doesn't make any sense. How can we wait for it to close back up? Do we just take it if it closes back above? No. What you're going to do is you're going to wait for a price to come, break the swing high. Like, read the note that we made. Where is it? If touch the red SMA, wait for price to break the current swing high or low, or swing high for bullish, swing low for bearish, and go back to entry criteria 1. So we broke the red SMA right here. Now we want to wait for a price to break the current swing high. Where is the swing high? All the way up here. Okay. We want to wait for a price to come all the way back up, break the swing high, and then we can look for another retracement and continuation play by watching it tap the green and red SMA. Now, why do we want to do that? What's that going to tell us? If price breaks the swing high and then retraces but does a super strong retracement and breaks the red SMA, we don't want to take a continuation play after it breaks, like, for example, this high mini high right here. We want it to break the full high all the way up here, the swing high, to show that it wants to continue in the original trend and make new higher highs. Because at this current point, we did break this mini high, but we still have this ginormous, you could say, macro high or swing high that we haven't broken yet. And we're still technically in that retracement period. So it's not a high probability trade, at least for my playbook. So I want to see price break the full swing high to show strength and continuation. And then I could take a retracement play, catch another play, and then you already know, profit off of that move. Or lose, because those trades still don't win every single time, right? It's all about trusting the probabilities and trusting your edge and that you will win over a longer period of time, right? To have that positive win rate, positive RR, and positive expectancy. So let's see what happens after this. All right. Do we ever get price to come back? No, we haven't. See, guys, we tapped in and we actually touched the red SMA in this situation, right? Let's just say price did clear the high in this situation. Okay. In this, we really didn't, but let's just say it did clear the high. All we'd look for is for price to retrace to the, what's it called, green and red SMA, and wait for a green candle close out. But what happened? We tapped the red SMA and then we got a green candle close out. We're not going to enter off this trade. Why? Because we invalidated by passing the extended pullback zone, you could say, right? Our pullback zone is the green and red SMA. When we tap past the red one, whether that be a candle close or a wick past it, we invalidate the pullback and we have to reset by passing the swing high again. All right. So we're constantly waiting for that to happen. Do we get that? Do we get that? I don't think so. I'm honestly not sure. So we never get that. Forever and ever and ever. So, but generally, that's what we're going to want to look for. We want to see price break the actual swing high, and then we'll look for retracement plays again. Let's see. Are we going to get that? Okay. Boom. So we got it late in the day. Okay, I'm not even trading at this current point in the day, but we got it way later in the day. Right here. We broke the swing high with this move up right here. And then we retraced. Again, what are the rules? We tap between the green and red SMA. We got a green candle closing out. That's our entry. Market order right on the candle close after tapping between the green and red SMA. Stop loss at the furthest point of the pullback. TP is going to be at a swing high. But remember the 1-to-1 RR break-even rule. We're going to mark that out right here. All right. We can get rid of this black line because we already passed the swing high. You guys can see this trade ended up floating in profit, and then our stops would move to break even, and then we would get stopped out on that at break even. All right. So that's going to be a break even trade right there. But then as soon as that happened, we got another entry right there. Our stop loss is going to be placed at the furthest point of the pullback, which is still at this same candle because that's the furthest point. Our break-even rule again, 1-to-1 RR all the way up here. And it looks like it did not get... I'm going to close this line right here. It's making everything overcomplicated. It did not get hit after moving 1-to-1 RR. So we're going to move our TP all the way up there. And our stop loss is at break-even now. So we're just going to let it play out and see what happens here. And TP destroyed on that trade. All right, another banger day. Again, we followed the rules, we followed TP, we followed the stop loss rules. You guys can even see it played out as well, way outside of my trading window, all the way at 9:04, which is just 12:04 p.m. Eastern time because I'm in Pacific time. But that's literally kind of most of the different circumstances or situations you'll get with this strategy. So I hope that cleared up how my strategy works. You guys now have all those rules that you guys can implement. I'm just leave it on the chart for now. All those rules you can implement. Screenshot this, write it in your notebook, write it in your journal. I'll see if I can add it to the description of the YouTube video so you guys can check this out and use it. But shouldn't be too difficult. Go over the rules as much as you want. Go and actually identify the setups in replay trading, or just if you don't have the replay mode, just go back in hindsight and go over the actual criterias starting from market open and see the trades play out. All right, if you guys are still here, I'm gonna add some extra pointers for how I trade. I personally trade, we could say RO's trade rules, two trades a day. 2 trades a day, 9:30 a.m. to 10:30 a.m. EST trading window. NQ futures, 30-second time frame. This is literally the exact setup I use, guys. If you guys follow all these rules, you're gonna be trading the exact same strategy that I'm trading. Plain and simple. This is literally all that I do. It's not complicated, bro. It's simple. I developed a simple strategy, back-tested it, found it to be profitable, and tested it as well in the live trading, and it's shown success. My members have got payouts. I got payouts, bro. Not that complicated. So use these rules, check it out, learn it, master it, trade live with me if you want. The link in my description to join, watch your trade live, see me apply it in real time. So that's all I got for y'all in this video. If you guys got any questions on actually specific parts of the strategy that I didn't go over, I think I went over everything. But if there's any other questions about any component, maybe not even the strategy related, let me know in the comments. I'll answer it as soon as I can, or make a separate video if I think it's helpful. All right, everyone stay blessed. I'll catch you guys in the Discord or in the next video. Peace.